Hi, I'm Palacios Jr., our Director of Research here at John Burns with our second quarter 2017 big picture wrap-up. I think some of the big takeaways for the second quarter of the year, really that the economy as well as the overall housing market continued to get better as the quarter progressed. We've revised our headline single-family construction forecast up from 9% growth to 12% growth. And really what's driving that is what we're seeing across almost every single housing market throughout the country. Things continue to get better compared to what we were seeing in 2016. We just held our annual client event out in Laguna Beach, our summit event, and I would say too, just the attitudes around housing are much more optimistic compared to what we were seeing in 2016. As I mentioned, we've upgraded quite a few housing markets year to date, specifically in the second quarter of this year. Seattle, I would say, continues to be really the best market across the country. Everything we're hearing there from builders tells us that sales and pricing are continuing to accelerate. We've also upgraded some of the other large markets like Houston, Minneapolis, Naples, and even Washington, D.C. Some of the markets that are really late to the recovery are finally starting to take center stage, specifically from a volume standpoint. I would put markets like Phoenix, Las Vegas, and Riverside, San Bernardino in that camp. I think what's driving that is A, the economy has finally come back, and then B, there's product out there which is now being targeted towards the entry-level buyer. So there's actually demand and there's actually supply. Builders are continuing to raise prices. This is something that we've found from our builder survey that Jody Kahn runs. And then I would say though that on the gross margin front, we are continuing to see builder gross margins compress, but in terms of operating income, it is accelerating year over year, and what's really driving that is both volume growth and then just them dialing in things operationally. In terms of our building product coverage, we've continued to keep our repair and remodel forecast at 5% growth for 2017. We think a bit of that has been pulled forward into Q1, largely due to the warmer weather we've seen across the country. Segueing to the rental market, when you compare the apartment space to the single-family rental space, we definitely continue to favor the single-family rental space. Everything we see there continues to point towards solid rent growth. Job growth in all the major markets is really solid, 2% plus, and home prices continue to rip higher, 6% plus year over year. I think on the apartment side, we've been well ahead of this, but we continue to expect that market to slow overall. Thanks again for joining us for our 2Q 2017 Big Picture Wrap-Up. If you guys have any questions, please feel free to reach out to myself or really anybody here at the firm. And keep the date in mind of November 8th, which will be out in New York for our Housing Outlook event. We really look forward to seeing all of you there. Thanks.